Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Bitcoin tops 50,000. Our portfolio VXX surges. Tip of the week. Trend following on Ethereum. And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. If we exclude the cryptocurrency sector, it hasn't been a particularly interesting week on the markets. Stock indexes are practically unchanged from the previous week, while the bearish trend continues for the bond sector. This is the T-bond future and the Treasury note future. As you can see, they are in bearish trend, and the same goes for the bond future. As for the energy sector, on the other hand, another excellent week. In particular, we see gasoline in strong bullish trend, as well as heating oil and crude oil. Natural gas rose, even though it is obviously not in an uptrend, as you can see from this chart. As for metals, an overall positive week if we exclude gold. There is not much else to report on traditional financial markets. We have mixed returns for soft commodities and positive returns for cereals. But surely the protagonist also for this week is once again the Bitcoin future, which broke all the historical highs by going above the psychological threshold of $50,000. We are now at $53,500 and this week it has risen by 11%. To be honest, the whole cryptocurrency sector is in very strong growth. We'll see if this trend will continue in the next weeks. On the volatility front, there is not much to say. Volatility is in contraction for equity indices compared to the long-term percentile, and the same goes for implied volatility. The term structure is in full contango. The VIX index is at low levels compared to its historical average of the last 6-8 months, and therefore we can say that traders do not expect surprises for the next few weeks. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to show you two strategies on the VXX ATN, which is a sort of ETF, which replicates the VIX future with a duration of 30 days. So it is a mix, we can say, of the first expiration and the second expiration. The strategy came from the course Cracking Volatility by Francesco Placci, and we can see that it is out of sample since many years. And we can see that in the last week the strategy waited for an increment in volatility and then entered short. And now has an open profit of around $3,000. Here with this strategy we enter with a size of $25,000 per trade. And so we can say that the strategy is in profit of about 14%. The strategy was developed on a daily time frame. You can see it here. So these are daily bars. And also looking at the equity curve, we can see that the strategy performed really well during the period in analysis. And we can see also that this underlying is very volatile, because as said, we enter with a size of $25,000, and we can see that the strategy had a profit of over $40,000 in the last year and a half. And also the average trade is enormous, we can say. It's 575, so around 2% of our position value. Okay, now we can go on to the next strategy, that as this one is an only short strategy, because it tries to follow the bearish bias that affect this market. And in particular, it waits for, also here we can say, an uptrend in volatility, so an increment, a big increment in volatility, to enter then short, so in the opposite side of the market, at the breakout of the linear regression. The tendency of this market is to decrease its value during the most period of time, but in some cases it increases his volatility very much, and in that cases should be good to have some exit condition, like for example the stop loss, because as we see here, the market can really go higher and higher. And so if you don't have any exit conditions, you may face a very big drawdown. The strategy in the last week had a volatile week. We can see that took a good trade, and then also a stop loss, and also a trade at break even, we can say. But all in all, the strategy performed really well. We can see it here. The average trade is around 1% of our, as said, position value. And also the equity curve is really good. Of course, there are some moments where we face some drawdowns, but all in all, the strategy behaved really well. Also, if we think that this strategy is out of sample since many years. I invite you to diversify your portfolio, and so use also these kind of instruments, underlyings, that may be unconventional for some of you, but they can be used for our trading.
Hi everyone, and welcome back from Andrea Unger. Today we will have a look more in the details to the ETH USD. There is a cryptocurrency, and we will use the data coming from VXX. That is one of the most important brokerage service on the cryptocurrencies. And we have to use, unfortunately, this kind of data, and we are not able to use the futures data. About the future we talked about in the previous episode, just because the future is too new, and then there is no data available. So we have to study something on the most similar product that, in my opinion, is ETH USD. Our backtest will be done so on this kind of data, and we will always use for this purpose a cash amount per trade equal to $100,000. So let's start from the first strategy. The first one is a simple breakout strategy on yesterday's session's high and low. So we will buy on yesterday's session high, and we will go short on yesterday's session low. While the second one is always a breakout, but on the highest level between the high of the previous session and the high of 2 sessions ago, and vice versa for the short side. So we will go short on the lowest low on of the calculated on the yesterday's session and 2 days ago session. And then here the third model is always in this kind of breakout, but the levels are built on the latest 5 sessions. So we will buy on the highest high calculated within the last 5 sessions, and we will sell on the lowest low calculated within the last 5 sessions. So let's go to the first model first. This is the equity curve. It's absolutely a nice equity curve, and I think there might be a significant margin of improvement, because this is a raw strategy, of course. So you should try to implement some filters to improve the quality of the trades. But in general, I would say that it seems to be a pretty nice equity, and it seems to be pretty consistent all over the considered time, apart some very small phases. But we have to remember in this case that we are working on very few years. In fact, the historical data set starts from January 27th, 2017, and this is because the data prior to this date was full of spikes and strange data, in my opinion, so I just preferred to concentrate on those amount of data. But we are often used to see equity curves calculated on a larger amount of times, so from 26 or 2010 or 28, and having a look to equity curves analyzed on smaller time horizon is a bit different, because they seem to be more zoomed in if compared to equity curve calculated on a larger amount of time. So I think this is not a real inconsistent period in general, just because here we see everything like if a normal equity would be zoomed in, and this is only a prospective point of view, of course. But if we go then to the separate long and short equity curve, we can see that long part is extremely nice and seems to be extremely consistent all over all the data considered. The short side is not good in the end, just because it loses money on the amount of data set considered. But it's interesting that in this period it earned a lot of money, while the ETH USD underlying was falling. So it seems to be quite nice in the correct period, and maybe it can be useful to find a good filter than to trade the short only in the correct period of time. So only when ETH USD maybe has a downtrend, a bearish trend in general. Then if we go on the second trigger, it seems to be very nice also in this case. In the last part of the equity curve, we can see here the equity has a flat shape, but in my opinion it's not a big problem, because then in the very last part a significant amount of profits has been made. So it seems to be extremely consistent in general all over the amount of time considered. And it's also important to notice that this kind of approach seems to pay even more than the previous one. So there is an improvement with this kind of trigger in general, in my opinion. Let's have a look to the last one. And the last one, in my opinion, is not the worst one between the three we have seen until this moment, because it seems to be more inconsistent, and in fact there are more sideways phases in general, in my opinion, like said here, or here, or also here. This is the worst period, in my opinion, because if you would add the slippage and commission to this kind of approach, it most probably you would have suffered a lot during this phase, because you would have paid a lot of slippage and commission in general. But overall, it seems that this product gives a positive answer to the trend following approach. And so I would suggest everyone to try to develop trend following or breakout approaches and then to filter them a little bit, so more than this kind of initial setups I have shown you.
Let's take a look at the main rollovers for the next week. All energy futures will expire, but I remind you that we have already rolled the crude oil future this week. So the first to be rolled will be natural gas, and then gasoline and heating oil will follow. Finally, at the end of the month, there will be also the expiration of the Bitcoin future. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of The Trading Show.